Thanks.
Space to semi stocks are squarely in the momentum sector category right now, but the S&P 500 is experiencing quite its own momentum at the moment, on pace for its 20th record close this year. Any gain will do it, and right now we've got it up 4 points. And it's also on track for its 9th straight week of gains. That's quite a winning streak. The broader market index has also scored back-to-back double-digit percentage gains over the past 3 years. So will we be making it a fourth? And on top of all of this, Goldman Sachs now saying that the streak will not end. It is raising its year-end S&P 500 target from 7,600 to 8,000. Let's bring in one of the top tech investors in the nation to find out if Goldman is right. Founder and CEO of Niles Investment Management, Dan Niles. Well, Goldman plus everything else we just outlined, Dan, what do you think?
Well, Liz, I mean, on March 31st, we put out a piece, and it was entitled, "History May Not Repeat Itself, but It Often Does Rhyme." And what we tried to say was, if you go back to 1997 and 98, you were in years 3 and 4 of the internet infrastructure build out, and you had macro scares back then, right? The Asian currency crisis in 97, it knocked the S&P down 11% intra-year. In 98, you had the Russian bond default and long-term capital management failure. That knocked the S&P down 19%. But both of those years ended up 31 and up 27% for the full year. And so I looked at the Iran war and said, you know, this is probably very similar to that situation. And since March 30th, which turned out to be the bottom, the S&P is obviously up 19%, and the semiconductor index is up 80%. Looks like the Iran war's, you know, going through the fits and starts, but it is going to wind down, and that should get oil lower and put juice to the market. So with AI as the fundamental backdrop, just like the internet was the fundamental backdrop in 97 and 98, I don't see any reason why the market can't continue to go higher through the end of the year.
Yeah, and for people who just tuned in, we've got crude oil in the aftermarket down 4.75%, Brent down 4.6%. But if you're saying that macro scares, the likes of what we've seen maybe with tariffs and then this year with the Iran war, if people are to hold on tight and roll with those highs and lows and hang in there for potentially another double-digit percentage gain this year, where should they let go? What should they see and look for to say, you know what, now it's time to sell some of my really hot winners?
Well, I mean, I think the spaces that we like from here going forward is we like a lot of the consumer discretionary names, right? The ones that you have to be worried about with oil sitting in the 90 to 100 range. So names like Disney or TKO or Take-Two Interactive, these are all names that are down, you know, roughly 10%, give or take, for the year versus the S&P that's up 10% or so for the year. That's the areas where we look and say there's a good risk versus reward trade there, and because those stocks are still pretty much on their backs, versus AI, which it's no surprise that AI is a good place to be invested. So for us, those are the sectors that we're looking at, which is consumer discretionary, to find new ideas that can hopefully outperform through the rest of this year.
Yeah, I mean, year to date, you've got Disney down about 8%, Take-Two Interactive year to date, and that one's down a bit more, 13.7%. So you say it's important to start positioning for post-war trades now.
Yeah, because I mean, the one thing I've been saying for a while, the one thing you know for certain is there's going to be midterm elections in November. And if oil is not down by then, the incumbent party is going to get absolutely killed at the polls based on history. So if you know that President Trump's going to want out of this Iran situation as soon as possible, so oil can start to come lower before then. And so that's been my thesis. It obviously looks like we're going to get there. It's going to be a messy process, right? You don't ever want to see how the sausage gets made, but I think we'll ultimately get there. Oil will drop, and you know, with increased production from areas like Venezuela to offset what's going on in the Middle East, that's a good thing. And I think the market, powered by AI underneath this all, and 25% profit growth for the S&P 500. Let's not forget, that is incredibly strong EPS growth for this year. that should keep the market going higher through the end of the year.
So it may come down to politics, at least when, you start to see oil perhaps continue to come down. It's still not near where it was before the war, which is $67 a barrel. And at the moment, we do have it at $89 a barrel. How much are you exposed to the semiconductor space, Dan?
Well, I mean, I love semiconductors, right? That's my background, right? I'm an electrical engineer. That's the area where I cut my teeth as a research analyst. And a simple way to think about it is the following. People can scream bubble, which is right to do so. Every great technological revolution, whether it's canals, railroads, electricity, the internet, or today AI, you've always had a bubble because there's so much profits to be made that everybody overinvests. But it doesn't mean that the bubble can't keep inflating for a long period of time. So semis is at the tip of that spear, where if you say, well, hyperscaler spending is up 70% this year, and semiconductor stocks are up 80% this year, you go, well, yeah, that kind of makes sense because that's what makes AI possible. So I think for the rest of this year, especially with agentic AI, which showed up in January, that increases token demand by 10 to 100x relative to just asking a simple question where you get a simple answer. These agents are running 24/7, multiple days a week. And so with that, you should get another step function change in demand for compute power.
Yeah, they are soaking up that compute power, and people are demanding the use of it. So I get your thesis here. Really quick, though, Micron made such a splash yesterday. It wasn't Micron that made the splash. It was UBS and an analyst that upped his price target threefold after the stock had already run up dramatically. Does anything signal to you that now we're starting to get into a little bit of the silly season?
Yeah, I mean, it's obviously silly, but it doesn't mean the silliness can't continue, right? We saw similar things in the late 1990s, and Alan Greenspan, the chairman of the Federal Reserve, famously on, I think it was like December 6th of 1996, said rational exuberance. Well, guess what? The S&P went up 90% from there to its peak. NASDAQ went up close to 300%, and the semiconductor index went up, I think it was like 450% to its peak. So if you're early in calling a bubble, you're just wrong. And so for us right now, you have something you didn't have back then. You didn't have a step function change in internet usage. With agentic, it literally you have a 10 to 100 times increase in compute demand from that, which is very different than during the internet era. So I see at least one more year of very, very strong growth. I fully expect sometime next year, areas like semiconductors will be down 30 to 50%, but it wouldn't surprise me to see a massive move from here because NVIDIA at 25 times PE for 80% revenue growth, when Cisco back in the internet era was at a PE of 140 times for 60% growth. That doesn't scream bubble, right?
Yeah, and Micron's forward PE 16, even cheaper. Dan, wonderful to have you, and I like your thinking about positioning investors for the post-Iran war trades to buy now. So thanks so much. Good to see you.